guys, what is going on? Welcome back to my Robinhood portfolio. Today I wanted to quickly talk about the functionality in Robinhood with regards to putting in buy and sell orders. I've noticed in the comment threads a lot of new viewers on the channel, a lot of new investors on Robinhood, and a lot of you guys have been a little bit unclear on the different types of buy and sell orders that can be placed in Robinhood. One viewer of note, Cactus Leone, writes, can you do a video on how to do a limit sell, limit buy order? So I thought I'd just quickly jump into the portfolio using Ford as an example. First with this video doing all four of the different ways in which to buy a stock, and then putting out a second video talking about all four of the ways in which to sell a stock. Again, I've done some prior videos discussing all four buy orders as well as all four sell orders, but it's been quite some time, a lot of new viewers on the channel, so I thought I'd just quickly do an update video, again, going through the 4 buy orders and 4 sell orders. So having said all that, let's jump into the portfolio using Ford as an example. As you guys know, I do a lot of day and swing trades with Ford, and I utilize a lot of these orders when I do my day and swing trading. So if we take a look here, you can see on the front page here, there's a button for buy and a button for sell. If we go ahead and click on the buy button, unfortunately, it defaults to a market buy. But if we click on the upper right hand tab there, order types, you can see there's actually 4 different order types here. There is a market buy, a limit buy, a stop loss buy. Unfortunately, that's not termed correctly. That is actually a stop price and then stop limit. And when we jump into that stop loss, you'll see that it changes from stop loss to stop price. So stop loss would be a sell order, but for a buy order, it's a stop price. So if we take a look at all 4 of those and click on market, again, this is the default, unfortunately, because I think this is the worst way of buying stocks within Robinhood. It's simply asking you to specify the number of shares. So if you put 5 shares there, you can see that the estimated cost is $56.25, but it's only an estimated cost because you have no control over the price of a stock. And this becomes very pertinent when we talk about penny stock trading. Penny stocks can change very, very quickly in a short amount of time, going from maybe 10 cents to 50 cents. So you have no control over the stock, and the time that it takes you to jump into the order set here, put the order in, the price of the stock may have changed, but with the market buy, you have no control over that price. The better way of doing this is clicking on order types and then going ahead and clicking on limit order. I wish this is the default method within Robinhood. I think this is the best initial order to place, either for a buy and hold investor or a penny stock investor, because you have control over the price of a stock. So if we click on limit here, you'll see that now it's asking us to specify the maximum amount you're willing to pay per share of a stock. So the stock's $11.25. You could put in $11.25 and do the order just like a market order. And if the price has not increased beyond $11.25 or it's actually decreased, you'll go ahead and buy that stock. So if we put in $11.25, for example, and click next, now it's asking us time in force. I typically just have the order placed for that day so I don't lose track of orders over time. Or you can do a never expires order. If you put it in, it's going to be active until you go in and deselect that order. I don't recommend doing that because, again, if you're putting in a lot of orders, you can forget about orders, and they're going to be there, and that capital that you're using to buy that stock with won't be showing up in your buy power, and you may not remember exactly when you put that order in. So I always just put 3 p.m. at the end of closing, at the end of trading each day. The order will cancel. You don't have to worry about going through and trying to find those orders to cancel them. So we put 3 p.m. Now it's asking us for how many shares. Now, it's still saying estimated cost here, but you'll never buy a stock more than $11.25. That is the limit price. So you could buy it for $11 or $11.20, $11.24, but you'll never buy it for more than $11.25, which is perfect for either buy and hold traders or penny stock traders. You can really limit the price you're going to pay. So if a penny stock is moving very rapidly, let's say it went from $11.25 to $13, you'll never buy it because you have the limit of $11.25. If you don't buy it at the end of the day, putting that order in for 3 p.m., the order cancels. You don't have to worry about it. It's gone. If that makes sense. So it's a great way of controlling the price that you're willing to pay. Or let's say that, the price is $11.25, but, you think it's going to start trending back. You can put the order in for $10.50, for example, and it's going to be there not executing until the stock price drops to that point. So if you're at work, if you're busy, if you can't watch your stocks, you can simply put these orders in at the beginning of the day, which is what I do, and simply wait until they execute. When it executes, you'll get a notification. You can jump into the portfolio, see that notification, and then you can start putting in your limit sell orders the exact same way that you're putting in limit buy orders. But I'll go through all of those different orders in a different sell video as well. So that is the default method I use. You can specify the exact price, and you'll buy the stock for that price or lower. So if we go back to order types, you can see that now there's two more sophisticated ways of trading. Stop loss, which, again, if we click into that particular option, now you see it's stop price. So it's not a stop loss, it's stop price. And then we have the stop limit as well. Again, a stop price, because these are buy orders. If these were sell orders, it would be stop loss, stop limit. But stop price and stop limit. These are a little bit more tricky, a little bit more difficult to understand, especially for new investors. And these are really meant for more high-frequency penny stock investors. I think buy and hold investors, you simply just need to do the limit order. But if you're a penny stock investor, you probably should use the stop loss and stop limit order. So kind of in the same way, you have control over the price with the stop price. So stop price, a price above the current price that converts your order to a market order. So you're really looking at momentum with the stock. So if we just kind of back out here, I'm going to kind of set this up a little bit different. I think market and limit orders are pretty easy to understand. But let's say, for example, Ford here, let's say we're starting the day off down here. The price of the stock is trading maybe $11.17. Not really sure if you want to get into the stock or not. Again, this is more for penny stocks that have very rapid upticks as well as pullbacks. Let's say you're not really wanting to get into it, but if the price started moving, you would want to get into the stock. So you can put a stop price in for maybe $1.20, for example. You can put a stop price in for right there. So if the stock hits that price, you'll go ahead and buy that stock because you think it's going to continue moving up. It's all about momentum. We're talking about momentum when we talk about the stop price and stop limit price orders. So again, if we go back into the buy order here, order type, stop price. So again, the price above the current price that converts your order to a market order. So let's say Ford here, $11.25, but you don't want to get into the stock unless the stock is moving. So if it moves to $11 and let's say 40 cents, you think it'll move to $12. Again, a little bit exaggerated with the price of this stock, but for penny stocks, moving from 10 cents to 20 cents, then it might move to 50 cents. So you would say, I don't want to buy this stock until it gets to $12, for example, with the idea that you're going to be catching it mid-momentum. If we go back to the graph again, you're basically putting it in, you're trying to catch the price here. So you'll buy at this level here with the idea that the stock will continue to trend up. But if the price of the stock is not moving at all, you don't want to buy the stock. You only want to buy it if it's moving past a certain point. You buy it here, essentially, you buy it here expecting the price to continue moving up, and then you can put in a sell order in later to make a nice little profit from here to here. But again, you don't want to buy the stock unless it hits that threshold. If it doesn't hit that threshold, you don't buy. Once it goes over that threshold, you buy the stock because you think the momentum will continue moving forward, if that makes sense. Again, a little bit more tricky, much more sophisticated way in which to buy the stock. So again, you can put in $12 here. Time in force, I always put in 3 p.m. for the reasons discussed prior. Then again, you're simply putting in a number of shares that you want to go ahead and buy. So again, this is for more of momentum type of trading. An even more sophisticated method, if we go back to buy, order types, now the stop limit. So this is a two-part order here. So we're going to be putting in a limit price as well as that stop limit price as well. The stop price first. So again, you don't want to buy the stock unless there's momentum. You think it's going to $13, for example. So you're going to buy at 12. Again, you're only buying if it meets a particular threshold. So again, going back to the chart, you're putting in, let's say, the order here. So any price above this, you're going to buy the stock. So if the stock is doing this, you won't buy the stock. As soon as it hits this, you're going to buy right there with the expectation that it's going to continue going up. You're basically banking on the count that the stock will, with momentum trading, continue trending up. And then you hope that it trends up to this point somewhere, then you sell off at one of these peaks up here, if that makes sense. So very nuanced and sophisticated way of buying a stock. So you put in your stop limit of $12, for example. So the order will never go into effect until the price of the stock gets up to $12. But now you're putting a limit price in. So now you're saying that since it's peaked up to that level, now I want to maybe put the limit price in at $11.30, for example. So you won't buy the stock until it gets up to $12. And then if it does get to $12, now you have a limit price in effect. So then if it trends back down to $11.30, you buy the stock. If that makes sense. So again, I want to go back to the graph because this is a much trickier way of doing the stock. So again, you're putting in basically your stop price here. So if the price of the stock hits this particular level here, you'll be putting in that limit order now. So you won't be putting in a market order and immediately buying the stock. You're putting in a limit order. So the stock is bouncing around here, that order's not in, and all of a sudden it just shoots up like this. So now that since it's above that order, now your limit price is in effect. But remember, your limit price is down here, right? This was the $12 here, and this was $11.30. So now if the price of the stock goes all the way back down, you'll buy the stock here with the idea that it might go up again. So again, much more nuanced and much more sophisticated. And if we take a look at the chart here, we'll be taking a look at some of these peaks here. Peaks and dips here. So the way this stock works is you can see here a trader, it started off the day here, it went up, it came back down, went up again, came back down. Now you may be thinking, wow, if it keeps spiking up and going down again, there's like a little bounce here. Let's put in one of these more sophisticated types of orders. So I'm not going to buy the stock until it hits this price here. So you can put your stop price in here. Then if it does hit that price, it's going to trend back. Then you can put your limit price in down here. So you have no order until it hits that price. Now you have an order. And then when it trends back down to this price, then you buy the stock. Much more sophisticated way of doing it. So again, you put your stop price in. So until the stock hits this price, there's no order. So there's no order, no order. Now there's an order. But your order is not a market order. You won't immediately buy here. You won't buy until you trend back down to, let's say, this peak here, for example. So then the stock starts trending down. Now you buy when it trends down because you have a stop price and then you also have a limit order. So you have two different orders in one, if that makes sense. So going back to order type, stop, limit, again, you don't have that order active until the price of the stock hits 12. Then when it hits 12, it has to trend back to, let's say, $1, whatever they may be, $1.30 or $1.29, for example. Until it trends back to that price, there's no price in effect. So much more sophisticated. The stop price, again, it's not labeled correctly. The stop price and the stop price with a limit on there, I basically call this a stop limit, are the more sophisticated ways of doing it. I think a limit order should be the default. Unfortunately, Robinhood default method is the market order. So 4 different ways of buying a stock. Again, you click on buy. You click in the upper right-hand corner for order types. Once you click on that, you see that there's a market, limit, stop loss, and stop limit. But again, those aren't labeled correctly. The stop loss is the stop price, and that stop limit, I call it stop limit, is the stop price with an additional stop limit order on there, or a limit order. So 4 different ways. Unfortunately, this is the default if you simply just go in, buy a stock. I think limit should be the stock. You have control over the price. All 3 of these, you have control over the price. These are a little bit more sophisticated for penny stock traders with momentum trading. But 4 different ways of putting in a stock, and I would really encourage you guys just maybe find a nice penny stock with a couple dollars only, kind of play around with some of these different order types, a market order, limit order, stop price, and stop limit to kind of see which one works best for you. But again, I think from my perspective, this should just be taken off. You should always do a limit orders as a default, and then if you have momentum trading, penny stock traders, do these here. Do the stop loss, which is stop price, and then stop limit, which is a stop price with a stop limit, or a stop price with a limit order, 2 orders. So this is essentially 2 orders here. So this is basically the stop price, which is here. Again, that's labeled incorrectly with a limit order on top. So it's basically this one and this one combined. So I hope that makes sense. If you guys have any questions about any of that, please let me know in the comment threads down below. I tried to go through this in a pretty structured way, a pretty in-depth way, going through the market limit, stop price, and stop limit orders. 4 very good ways of putting orders in, or actually I should say 3 good ways of putting orders in, and 1 way, which is the default, which I don't think anybody should be using. If you click on buy, it automatically defaults to market buy, unfortunately. You should always click on order types and then click on limit. Buy and hold investors, stocks that aren't moving that quickly, perfect way to put in an order. And for penny stock investors, you can put it in as a limit order alone, or you can do the stop loss, which is the stop price again, or the stop limit, which is the stop price plus limit order. So 2 orders in 1. So yeah, I don't want to talk about the sell orders until another video. There's a lot to talk about with these particular orders. Don't want to get you guys confused with the terminology. And unfortunately, Robinhood needs to update that one order there, the stop loss for stop price. And then they should maybe just put the stop limit as a stop price plus limit order to make it a little bit less confusing for new viewers that are new investors on Robinhood. So just wanted to quickly talk about the 4 different ways of buying a stock on Robinhood. If you guys have any additional insights on that, if you aren't clear on exactly what's going on, just leave a comment down below. I'll do my best to get back to that question as quickly as I can. And if there's a lot of different questions, about the buy orders, people aren't quite sure, I'll put out another video really going in depth about exactly what questions you guys are a little bit confused about. So those are the 4 orders. Again, do not put a market order in, always put a limit order in, and then for penny stock investors, the stop price and the stop price plus limit, which is the stop limit order, are the best ways to go. So yeah, not to make the video too long here, I'll kind of end it there. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. I definitely appreciate all your guys' support on the channel. The channel would not be possible without you guys. I've had a ton of fun putting out these videos. I've learned a ton, and I hope you guys have learned as well. The whole point of this video series, from my perspective, was to learn about the markets. And for your guys' perspective, I want you guys to learn as well. So if you guys have any questions about this video or other videos, let me know down below. If you guys have any good video ideas, let me know. Any stocks you're not quite sure about, let me know as well. And any good trading strategies that you guys are trying out, either with traditional stocks or penny stocks, let me know. As you guys know, I started a new subscriber penny stock challenge to kind of go through with my style of trading to learn about penny stocks. And again, I try to be as open as I can. I want all of you guys to see all my trades, full transparency. I know I'm probably the only YouTuber that does this. I don't think anybody else goes through all their orders, especially with penny stocks, especially with a lot of the orders I do. I know a lot of people talk about doing all these sophisticated ways of doing trading on Robinhood, but they never show orders because they don't do the orders. They don't do the trades. I do the trades. And I really wanted to show you guys what's possible on Robinhood by actually doing the trades with full transparency. So I hope you guys appreciate that. Sometimes it takes a lot of work to get all these videos out, but again, I've been having fun, I've been learning a ton, and as long as you guys are following along, having fun, learning, I'll continue doing this. So yeah, I don't want to make the video too long, so I'll kind of end it there, and we'll see you guys on the next video, which will be the 4 different sell orders. So until that video, we'll see you then.